GMGM, welcome to another Touchgrass podcast episode. Today we have Kevin from the Saturn team. Kevin, like you guys raised 800K, it feels like a week ago, and then you had the raise announcement on Thursday as well. How's it feeling, man? It feels like you have a lot of momentum with you guys right now.
It's feeling good. I think DeFi and TradFi are both kind of coming around the thesis that Saturn had, which was we believe that the digital credit will really change Bitcoin, TradFi, and the on-chain world.
Yeah.
So Stretch
Yeah,
and it's getting a lot of attention kind of all over the place.
100%. I think with everything that Michael Saylor is doing, every bit of innovation that Strategy is doing, like this is the type of thing that people want on chain. And a lot of people have come back to like, hey, how do we get this exposure on chain? And this is sort of the perfect venue to explore that. Kevin, before we get more into sort of Saturn, and we have a lot of questions to ask you about strategy as well. We've been doing this ongoing series on our pod where we ask VCs about the current VC landscape and how they're perceiving projects. Do you want to talk a little bit about your conversations with VCs? Like, I know we joked a little bit about, pre-seed 2 weeks ago, seed a week ago, and then, maybe we do a Series A next week. But how have your conversations with VCs been so far?
Yeah, so transparently, I think we actually finished the round in March. So it was before we even launched. And also transparently, I think the market has been harder these days, right? I think with all the token launches not doing well. And honestly, a lot of these VCs are just you're just beginning to see VCs come out with an announcement that they just finished the raise. Many VCs actually is not really deploying, or they're not deploying, but they tell you they are, I guess. Yeah, so I think for us at the beginning it was relatively hard, because you had to convince them not only about Saturn but also about strategy, right? So there's like a 2-layer effect for us. But what really ultimately worked out for Saturn is those who really understood both the TradFi and the crypto worlds, as well as those who really understood what strategy is doing. Spartan, at least our POC, both Lionel and Calvin really understood what strategy is doing, and they believe that Stretch is really going to change both kind of TradFi and DeFi, as well as when I first reached out to Easy Labs last year in August. The investor there, Haley and Ella there was really understood kind of the future at a really early stage, and that's because of this background in both TradFi and crypto.
Awesome. I want to ask about, Rajat mentioned the momentum you guys are having. Do you think, do you associate that a little bit to what's happening in broader DeFi where yields are compressing and people are, why do I have to take all this risk, and they want to have much different option with the same risk appetite? Do you think those people are coming over to Stretch digital credit kind of thing, or how is the money flowing in right now and what are you guys seeing?
Yeah, I think honestly, Saturn believes that there's this golden opportunity for us to scale to $1 billion. And there's really 2 variables here, right? The first variable is most crypto yields in the past really came from tokens, and tokens are not doing well, so yields have dropped, as well as the basis trade OI has really compressed. So the basis trade is now kind of at 3% or 4%. So on one hand, it's like pretty much yield across everything has collapsed. So when you bring Stretch, which is paying 11%, right, in dividend, it's a very, very compelling product for kind of the on-chain world. I think the other case is kind of post 1010, post stream finance. I think not only is yield important, but the level of transparency, how you generate this yield, is also very important, especially with all of like the recent hacks. It really just pushes the users to rethink what risk is. And I think the beauty of Saturn and what we're doing and Stretch is it's very transparent. It's homogeneous. We just give you this access to the STRC yields, right? So it's easy to underwrite. You know where the yields is from, and you can underwrite Stretch itself, right? It's backed by the Bitcoin on Strategy's balance sheet with the cash. You know exactly what they're going to do with the cash. They're just going to buy Bitcoin. So this entire flow of funds from users to us to Stretch to strategy to Bitcoin is very clear, and you know exactly what they're going to do. So users could, there's a lot of, I guess, FUD or people are arguing about whether there's a safe or not. But I think what I'm trying to say is at least you know what's happening, right? Like you know exactly what's happening. You know exactly when strategy might get risky. You know exactly how to kind of position your portfolio to get access. And I think even with like the recent Aave hack and 1010 is like, what is risk? I think the biggest risk is the risk you don't know, right? So we think insuring on Aave at 5 to 10% it's safe until it's not safe. But with strategy and Stretch, it's just so transparent. Right?
And for those who don't know, you should check out the strc.live website, all the buys of Bitcoin and how much the issuance is happening. It's very transparent. You can just see everything there. So I think that's one aspect of even the like digital treasury side as well, where it's so transparent and we can see what's happening. And Kevin, we've had a lot of DATs on the like ETH, Litecoin, others as well, and how they operate. But when it comes to strategy, there's so many components of it. Before it was just strategy buying, and right now there's so many new entities happening. For someone who's trying to get exposure to this, how do you kind of explain what's actually happening? How is the yield coming? How is the dividend coming? Can you kind of explain that aspect? Like if I have like 100K and I want the dividend, I like this approach, and I know I want exposure to Bitcoin, but I don't understand all of these components. I don't understand digital credit. How do you explain to that person?
Yeah. So the key mandate of strategy is to borrow money and buy Bitcoin. So having this leverage to the Bitcoin exposure, and thereby increasing Bitcoin per share over the long term. So when they issue Stretch, when they borrow at 11% or X percentage of cost of capital, and then they buy Bitcoin that's growing at 30%. Right. So their bet is that Bitcoin's CAGR is higher than their cost of capital. So that's kind of what they're doing. And from a user perspective, it's like if you don't want to take on the risk, right? If you really just want the first 10% yields guaranteed, you give money to them, they will take on all the volatility. They guarantee you the 10%. So essentially, you're also just really lending money to them for them to kind of take on this trade.
And that makes sense. Kevin, is this sort of, there are so many different aspects of the crypto world now that we also have the institutional side. Is there like a difference between understanding of strategy and what Saturn is doing between, I would say, crypto Twitter, liquid funds, and then institutional investors? Where do you have to spend the most time to sort of educate people on what Saturn is right now?
I think the hardest is probably liquid funds or institutional yield funds in DeFi, because to be honest, Stretch is a TradFi product. It's a preferred equity, right? It's relatively easy for TradFi funds to understand or to understand what a preferred equity is, right? For retails, they look at the yield, they think it's relatively safe, they'll kind of just go in. And the liquid funds are relatively sophisticated, but many of them don't really understand or aren't that familiar with like a preferred equity. So I think the middle is kind of always the hardest. And specifically, I think, I guess taking a step back, I think generally the crypto crowd just doesn't understand preferred equity as like an instrument, while TradFi doesn't understand Bitcoin as a collateral. I think that's kind of like the educational point that we have to do here.
And then does that make it bullish or bearish for institutions on strategy or Saturn in that regard? Like, do you have to put in more effort to explain it to institutions on why they should be allocating to Saturn, for example, right now?
Yeah, I think there's not much yield in the market today. So many of these institutions are reaching out. They want to kind of get allocated. So I think we do have to put in a lot of effort to kind of educate them. compared to like the other masses, right? I think we don't spend a lot of time educating to TradFi because many of them are not going to deploy on chain yet, or they're much slower. And retails, they're faster in their own underwriting. So yeah, the middle section is the hardest.
That makes sense. And then the last number I saw, you guys were at around 100 million in TVL. Do you have a segregation of, institutional versus retail? How much of that has come on from where?
Yeah, so around half. Half is institutional and half is retail.
That makes sense. Kevin, I think one of the things to understand here the most that we'd like to ask you, uh, I think one of the best things that a stablecoin can do or a product like yours can do is sort of understand the DeFi ecosystem and integrate it really well. Like you guys have the Pendle integrations going, you have the Strata integrations going, you have the tranches stuff going on. Is this sort of DeFi integration stuff a major focus for your team? And what else can we see out there in terms of Saturn composability with DeFi?
Yeah, so I think we consider Saturn this what I call convergence native company, right? We bring assets from the real world back on chain and then make it fully composable in DeFi. And actually, what's funny is Stretch is actually a crypto native yield. So Strategy brought Bitcoin to TradFi and we're bringing it back. I think the companies that survive in the next 10 years are the ones who can bring the best of both worlds, right? So what Saylor did is he's bringing out the best of the TradFi world. And what we want to do to Stretch is what can we unlock in Stretch that is really hard in TradFi. And obviously the Pendle markets, like a yield market for Stretch, is very cool. Tranching, senior and junior tranche in a permissionless way. It's also something that is really hard to do in TradFi today due to either regulation or it's not as efficient. So for us, kind of like the Loop, Pendle, and our Strata tranching integration is very, very important for us. We're still planning kind of a few interesting integrations moving forward, but I want to share that a little bit down the road.
I think I'm excited about what you guys are building, and I think the new layers, the composability aspect, obviously will look very creative and whatnot. But I think it'll take some time where the how isolated these things are. I think, but just the general crowd, they want exposure to the Sailor kind of playbook. But Kevin, recently Sailor, I mean, he's always in the news. He's always creating headlines. But the most recent one is that in the earnings call, he said they might sell some Bitcoin to cover dividends. First, I mean, I don't know why people are shocked because this is something not new. They have kind of mentioned this over the past months that this is a possibility. Could you kind of explain that aspect of selling the Bitcoin they own to buy more Bitcoin? I think that's the part people are not understanding quite well. Like, why do they have to sell Bitcoin and uh, do they have to raise more cash? Can you kind of explain that?
Yeah, I mean, one of the key features of Stretch is that it's really backed by Strategy's entire balance sheet, right? It's backed by the 800K Bitcoin. And if you don't make a commitment to sell it, then it's meaningless, right? So if I tell you this is backed by 800K of Bitcoin, but I'm not going to sell it, then from a credit side, they're not going to underwrite it as like a 4 times or like a 25% LTV. And I think there's going to be a lot of volatility between like the MicroStrategy stock to Bitcoin price as well. The MNAV goes from 2 to maybe in the future negative 0.5, right? I think selling equity was the main way of them to kind of capture Bitcoin per share increase when there's an MNAV. But when there's a discount to the MNAV, selling the Bitcoin to buy back the share is a great way for them to capture additional Bitcoin per share increase. So to kind of generalize this, I actually made a tweet about this, right? I think for the STRC shareholders, this is actually very good because it shows that Saylor is committed to pay the dividend as well as keeping the peg, right? It also really substantiate the metric BTC rating, right? It's backed 4 times by the Bitcoin on the balance sheet. He's willing to sell it to actually pay the dividend. So I think from a Saturn perspective, in which we're holding over 60 million of stretch, we like this announcement, right? And for the MicroStrategy shareholders, I think many of the long-term liquid funds or hedge funds that I've actually talked with, one of the major concerns is, what if in the long run MNAV is 0.5? Like, it doesn't really need to be 1, right? And with Saylor saying, okay, I'm going to commit, or I'm open to the idea of selling the Bitcoin to buy back the stock if it's below one MNAV, it actually gives the shareholders or the equity holders more, I guess, the long-term value of holding the stock, right? And I think, as Saylor mentioned on the call, it's just increase in the flexibility and the optionality of the balance, right? Like, why would you want to close the strongest part of your balance sheet to what you can do, right? So and third, right, if it's good for the stretch holders, and if it's good for the MicroStrategy shareholders, then by transitive property, it should technically ultimately be good for Bitcoin, right?
100%.
It's honestly not.
I think yeah, go ahead.
Yeah, it's also not healthy for the market to bank on strategy never to sell, right? So I think overall it's a really net positive thing for the market.
100%. I think the crypto Twitter is always funny. They were treating this as if a whale holding 10% supply of a meme coin, and the minute he starts selling, everyone will go and sell it, and it will go to zero. That's the kind of reaction you got from crypto Twitter, where you have one guy holding 5% of Bitcoin, and the minute he starts selling something, it just crash. That's the kind of sentiment you got. But I think that's the kind of thing they want to avoid, and the kind they're trying to dispel, where uh, MicroStrategy can sell some Bitcoin. The world is not going to end. Bitcoin is not going to die. And they want everyone is kind of, Michael Saylor tweets these like, "Don't ever sell your Bitcoin" and stuff. So suddenly that change in narrative. I think they're just letting people get comfortable with that fact that this is a possibility, so that it doesn't come as a shock down the line. Do you also see it that way, where they're just trying to slowly build up to that moment?
I mean, first, I think strategy and Saylor's very adaptive. I think he's very adaptive to the market. Like, from the moment he started buying Bitcoin in 2020, he tried all kinds of leveraged, right? He started to sell the equity now, and then for a period of time, the converts, and now kind of all 5 different preferred equities. I think strategy is actually a growth company, right? So it's actually important for them to kind of stay flexible here, right? Like, as we mentioned earlier, it's just increasing in flexibility. Do I think he's preparing the market for an eventual sell? I think in a sense, yes. But at the same time, for there to be an event in which he would have to sell, I think it's far from here, right? I think he hasn't even touched the cash buffer. He's mainly been kind of paying interest with the equity. So I think Bitcoin payments is going to be way down the line, right? I think it's very clear. He has 3 tools to pay. First tool is equity issuance. Second tool is the cash buffer, and potentially third tool is the Bitcoin sales. And until unless he doesn't have the access to equity, then it's going to be quite far from him selling Bitcoin, right?
Yeah. And also, what do you think about him not buying this past week at all? Is that because of the dividends, kind of like, instead of just being once a month, it has become like twice right now? Like, that kind of cadence of distributing the interest, has that been the impact, or is it just he's out of ammo right now, and it's not at 100 right now? Because we have seen over the past couple of 3 or 4 weeks that he's been buying in size like 2-3 billion every week. Why has that not happened this past week? And is that because of the change in structure of dividends?
Yeah, I mean, his main funding 2 methods right now is the equity and STRC, right? I think over the last week and this week, STRC just has not been at peg, which is $100. So they've not been issuing stretch to buy Bitcoin. So it's kind of natural for strategy to not kind of at least stretch as one of their main fundraising tools is closed off last week. And honestly, I was decently surprised that he didn't issue more equity because of the amount of stretch that he has issued in the past. We've talked with Saylor, and he said that he's looking at the metrics, the credit spreads, the price action, the volume, and he's also trying to stay adaptive. And I think he's also just testing, right? I think it's been 6 months of stretch, really taken off the last 2 months. I'm guessing, right? He's testing week to week to see how the market kind of reacts as well.
Gotcha. Does this prolonged, if this prolongs more than, I don't know, a couple weeks, is there any kind of impact on you guys or in terms of just shareholders? Like, what does that look like? Like, for example, nothing happens, there's not buying for a prolonged period. I don't want to compare this to other DATs or digital treasuries, but many have come out and said we are not going to buy, let's say, ETH or whatever other assets for a long time. We're going to slow down our buying. If that happens for Saylor, what are some of the impact you would say?
I mean, first, I think Saylor would buy up all of it if he has the opportunity. So I think it's different from other kind of DAT CEOs. And also, Bitcoin is a proof of work network. So even if he owns a substantial chunk of the asset, it doesn't really do anything to the network versus a POS, in which if you hold up 20% of the asset, it actually could impact the network. So I think Taylor's not going to stop. If he has an opportunity to buy 20%, he would.
That makes sense. And then Kevin, I think one thing that's we sort of missed out at the start of the episode, just sort of pivot this a little bit away into sort of the founding story here. What attracted you to Saylor strategy and sort of founding Saturn? Like what's the founding story here?
Yeah, so I was the lead researcher at Artemis, which is like a Web3 analytics firm. And then I have personally invested in strategy for 3 years now, since 2023. So I've really witnessed this surprising transformation of strategy to strategy, like the company. So when Saylor issued Stretch in July of last year, I was actually focused on RWAs for that few weeks because I was doing like a research report there. And I realized that DeFi was looking off chain for yields. And then strategy has created one of the best credit instruments there is even in TradFi. So it was we just had this epiphany that was like, okay, if DeFi wants good yields and the Stretch offers really good yields, you can match it too. And then that same week, I attended the Bitcoin Unconference in New York, and it was September, and it was really early, right? He was thinking out loud. He was like, okay, who should we sell Stretch to? Is it reinsurance, insurance? Is it hedge fund? Is it retail? And what popped up to my head was, why don't we just sell it to the on-chain users, right? Like they love Bitcoin, they want 11% back by Bitcoin. So it's really only natural, right? And if you look at U.S. credit, right, as this layer two, as this layer, like as this credit layer in the U.S. Once you have this credit layer, you can build applications on top. So we really thought that Bitcoin was this layer one, and Stretch was this layer two, and then the layer three is Saturn. So that was actually our thesis at the very beginning, and we're really happy to see that this ecosystem is really building up.
Were you surprised when it first launched? There was not that much momentum, and suddenly it was doing. They were buying 2-3 billion every day, and in 1 week they were buying 30,000 or something. Were you surprised that it picked up so fast? Because essentially, it's not like they're marketing like every other finance company out there, selling to everyone. So that kind of rapid exponential in terms of buying happened. Were you surprised by that, or was it just normal sailor buying?
To be honest, we are very surprised in terms of the amount of adoption, traction, attention that both TradFi, crypto, US, Asia has really given this attention to. When I was pitching VCs earlier this year, they asked me how big do you think Stretch can become? I said probably $10 billion by the end of 2027. And here we are in May, we're at 8.5 already, right? So I think I was way too bearish. When I talked with my other investor about the Asian market, one of his opinion was that Asian market was too early for Stretch, for digital credit, for Bitcoin. And it is very surprising to us that many of our retail users are actually from Asia, and they love it. Like they love Stretch, they love 11.5% yield, they love the Pendle markets. And even in Trapper, like if you look at the liquidity of Stretch, the topics that it's getting on, I guess, TradFi, crypto, or TradFi, Twitter, it's also kind of amazing. So I think it will beat my expectation at least.
That makes sense. And then, Kevin, is there a personal relationship with Mr. Saylor? Like, how often do you hang out with him? Is there a story?
Yeah, I think it's more business as of the moment. We would love to have more of like this personal relationship down the road. I'd love to kind of eat with them, have a coffee with them. But based on the few meetings I've had with them from when I first shared to now, I think he's really supportive of not only Saturn but the entire digital credit ecosystem. Right, he wants everybody to succeed, and he's happy to amplify to support everybody on this journey. So he wants this to be a diverse kind of journey as well, and I think we want that as well.
Yeah, as the bio suggests, the disciples of Saylor can't get more bullish than that. Kevin, whenever we have, we talked about where the yield is coming from. I think it's also very important for our audience. We love to explain the sort of underlying risk here. Obviously, if they want to understand underlying risks with strategy and everything that Saylor is doing, all of that is public. But just talking about Saturn in specific, are there any sort of risk parameters that you make sure to point out to institutional investors, retail investors that you could talk about on our pod?
Yeah, so to be clear, Saturn is more of like an RWA yield protocol than a yield-bearing stablecoin protocol, because when users stake the asset, users would actually take on the volatility of Stretch. So there's volatility. So if you see our Pendle market, if you see SGSDAT, our yield-bearing, our yield coin, the price actually is volatile. So there is kind of potentially like losses here if you buy too high, and then there's, however, over the long term, right? Like we think that it'll generally kind of go up. So that's number one. Number two is, I think it's important to highlight that Stretch is a preferred equity. It's not a debt instrument. So it could be like it will depeg for periods of time, and we believe it will repeg, obviously. So don't think that it's gonna be 100% of the time pegged to $100. So I think these two are the main risks that we want users to know. And obviously, the other risk is strategies credit risk, right? Like if Bitcoin dips low enough, long enough, he still has the $6 billion of net debt on the balance sheet. He has $1.5 billion of net interest payments that he has to pay per year. While we don't think it's anywhere close, but there is this long tail risk there.
Yeah. You also recently went live with your points program. I love your calling in gravity points. But can you kind of talk about that? Where should someone go right now if someone wants to explore Saturn, maybe deposit some money and see, check it out, what's happening here? How should they go about it, and how does it work?
Yeah, so we have a points program. We have a pretty diverse points program now. There's a bunch of things you can do, and so from the DEX pool to the Pendle markets, the tranche product. So users kind of get the points, no matter what they do with kind of like what they do in the ecosystem. I think we prioritize users who provide the liquidity in the DEX pool and the Pendle markets, kind of like the toppest. And then if you just hold passively your asset, you kind of earn the least. So that's kind of how we think about it. Yeah.
That makes sense. Kevin, we are getting up to time. This has been awesome so far. I think the last question has to be, where do we go from here? What's like the future roadmap? What's your vision with Saturn as we, keep going higher?
Yeah, I think Saturn is going to become kind of the hurdle rate on a chain. So yields kind of going forward in the future would all have to benchmark to Saturn to stretch. So we're going to grow Saturn to $1 billion and then $10 billion and be really focused on at least stretch for now, right? Like if this thing is working, we're going to be laser focused on just scaling stretch in DeFi.
Awesome. So basically, keep stacking sats and chill with DeFi yields on Saturn. But yeah, Kevin, this was awesome. I think everyone is a little misunderstanding with regards to what actually Saylor is doing, but I think this episode kind of clears some of that confusion. But yeah, thank you so much for your time.
Thank you guys. Thanks for having me on.
Thank you, Kevin.